On the shores of Lake Geneva, in the Beau Rivage Hotel in Lausanne, the Financial Times hosted its 4th annual Commodities Summit, attracting some of the biggest names from the resources industry to discuss the outlook for commodity prices after a period of marked volatility. I asked Marco Dunand, the chief executive of Mercuria, one of the fastest growing trading houses, how the acquisition of JP Morgan's physical commodities business had gone and where the company was now positioned.
I think we're 70% down the road on integration. You have to understand this transaction was sort of massive in the sense that we had to take over 40,000 contracts and deals and then 1,200 customers. There was a cutting date, obviously, in October where we had to start supplying gas in North America and power and make sure there would be no hiccup. And I think in large, there haven't been issues with customers in terms of performing contracts and so on and so forth, which is obviously very important. The integration of the people is sort of following its course, and it's going reasonably well. There's obviously the transaction itself, it's taken its toll on our staff who probably haven't been on holiday for about a year. So I think a lot of them sort of are looking forward to maybe a bit more quiet summer. But I think overall, we've achieved the strategic objective that we wanted, which is to have a stronger presence in North America. We have now a full staffed office in Canada, in Calgary, and it's very strong presence on physical gas and power. And it's so spreading the geographical risk of Mercuria, roughly a third, US, a third Asia, and a third EMEA. So to that extent, I think we're happy that the bulk of the work has been done and sort of looking forward now to kind of have a more regular sort of business outlook going forward.
And with that expanded footprint, I mean, obviously we've seen a big dislocation in oil prices over the past year. What opportunities is that presenting now for the new Mercuria Plus with the JP Morgan business?
I think we inherited from JP Morgan some storage, so obviously that's good to have when you have market structure in contango. Clearly, the decision of OPEC to kind of lift somehow their production level has put a lot of oil into the market, so the price have come down, but there was excess oil sort of being produced versus demand, so somebody needed to buy that oil and store it. So you've seen, national government company like India or China sort of acquiring for the strategic purposes more oil. You've seen oil refiners acquiring more oil, and trading company like ourselves who have access to storage have been purchasing that oil and selling the future contracts forward against it because of the contango kind of structure. And I think that's helped creating a bridge between physical and paper markets. So.
Okay. And something previously in the past you've looked at is bringing in a strategic investor into Mercuria. I mean, now that you've done the bulk of the sort of heavy lifting with the JP Morgan thing, is that a process that you'll resume? And can you describe to us what you're looking for? Because presumably it's not just a simple equity investor. You want a partner that will bring something to the table.
Yeah, balance sheet is actually quite conservative and is not that leveraged at all. So therefore, we don't need fresh capital. What we've been interested in and discussing with various parties across the world was the potential for those parties to become partners with Mercuria, and that would, in our opinion, allow us to enlarge our business activity in certain sectors. We don't think of ourselves as industrialists, so if we could have a partnership in some form with an industrialist, I think that could be a benefit to possibly both parties. We've put those discussions on hold during the JP Morgan acquisition, and I think that now that we're seeing the end of it, we've been approached by people, showing interest, to see how we could kind of cooperate in the future. I think there's a new people who also see the attraction of the JP integration platform through Mercuria as being a quite powerful combination. So we'll see. We'll restart those discussions over the next few weeks, and we'll see where the lead is.
Where do you want to take Mercuria from here? What's the vision for the sort of company? Because I mean, you have a different model to some of your peers.
So I think if you think of trading companies, and part of our business, of course, is trading, we think that it's very important to retain flexibility and not get engaged in too many decisions which kind of lead us to places where we cannot sort of move out of. So if I look back since 2008, there's been a lot of game changer sort of events happening, which we were not necessarily able to forecast 2 years in advance. If you look at the 2008 financial crisis, where a lot of our banks were in trouble, that's something we could not anticipate 2 years before. You know, the shale gas and shale crude, you know, it has been a game changer. Not many people anticipated that. If you had asked around last year about price outlook, I don't think many people would have told you that the oil market was going to go below 50. So therefore, you know, I think we just accept the fact that it's difficult in this extremely volatile and changing environment, climate change and so forth, to forecast what happened 2 or 3 years down the road.
Marco Dunand, thank you very much.
Thank you.